Happy Memorial Day, everybody. It's Jeffrey Scott. This is my weekend market update for the week ending Sunday, May 25th, 2025. Hope everybody has a happy and, more importantly, safe Memorial Day. Watch out for the sun if you're in the South. I titled this one, are the 200-day SMAs, Simple Moving Averages, the line in the sand for the spider and the Qs. Again, the weekend is 5/25/2025. My name is Jeffrey Scott, hgsidoc@gmail.com, Market MRI Pro at gmail.com, or Google Groups Top Down Trader. Um, the markets had a brilliant run off of a V bottom, certainly stalling the last week or so as tariff tantrums and other news come to dominate. The question is, are we done with this rally and we're coming back for a retest or worse? Or is this just a pause to refresh? We go on to new highs. Make the argument both ways, so which means I'm being careful, meaning I've got raised some cash, but I'm still long in the market. But I got less long every day this week as I took some profits along the way. All right, if you're new to my channel, hit the subscribe, hit the clock or the alarm, and you'll get notified when I post these. Thumbs up are always appreciated, and please subscribe. But I got better for you than subscribing. We'll talk about that in a few minutes. As always, this isn't investment advice, it's education. Anything I talk about has to be taken in the spirit of education. The intent of the video is to demonstrate how I use various tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. This video we're using predominantly Market MRI Pro and TradeStation, but I do have tools in multiple platforms. If you're looking for the wealth charts video, not yet. I'll do it before the market opens Tuesday or late Monday night, and it'll be a wealth charts based report. I will be doing a webinar on Monday at 10 a.m. Eastern. Memorial Day makes me want to think about those people that got me here. Yeah, beyond my parents, they're always somebody I think about. But the one that really comes to mind the most is Ian Woodward. And I'll mention a handful of other folks that we've lost over the last few years. But I'm going to use Monday as an opportunity to go old school, go back into HDSI, and I'll still use Market MRI Pro as well, and talk through some of the cool tricks within HCSI that Ian taught us, as well as his impulse indicators. The Bingo Bango Bongo Show. Link will be in the remarks section. If you wanted to stop and write this down because you don't trust me, you could do that too. Orange County meeting, I think the live room is pretty much full, unless there's late switches to online. Appreciate those that have been signing up. And again, even if you can't come, support the program because you'll get the videos and you'll get the PowerPoints from me, and there'll be an internet option if you can make it. Residence Inn and Suites, Tustin, Orange County, $400, 5 speakers, 3 days of education. Greg Mills at GAM72054 at AOL.com. What else can I promise you? I can promise you a free trial to Market MRI Pro. You'll get it sometime around the first of the, probably the 30th of May. We'll be sending them out. I have to get the list from Greg, who signed up by then. You'll get 1 week before, 2 weeks after. Everybody attends will get an opportunity for a $300 discount minimum. If you have stacking discounts that exceed that, that's the max of the discounts except for the $100 top-down traders. So if you join top-down traders, you sign up for the group, you'll get a $400 discount on the tool, which means the meeting was free. And oh, by the way, I don't even get paid my airfare to go to that meeting. So it's not like you're paying me. I just like, if I'm going to spend the time and bring in outsiders, I'd like to have a good size audience. Speaking of outsiders, I think we got a great lineup. John Person, Dan Fitzpatrick, Chris White, and Matt Caruso will all be talking. It'll be a mixed approach to the markets, all about stocks and swing trading. And I think you're going to like it, and I'll be looking for feedback because I can continue to bring in name brand outside speakers. My Google group is called Top Down Trader. I post something there every day, sometimes more. If I see a switch in the market, I'll put something there. You'll get notices of some closed educational programs that I do just for the people in Top Down Trader. And as I just mentioned, I'll give you an additional $100 discount on Market MRI Pro. Why? Because I'm not going to keep a mailing list. It never works for me. I get all these spam notifications when I do. And this way, what I can do is I can have my mailing list because it comes from the Google group and it doesn't come back spam all the time. So that's the reason why I did that. Is there a recession in our near future? Well, if you look at all those gray vertical bars on these 4 slides, you could see there's always a recession in our future. Just the question is when. Let's make a couple of comments. When the yield curve inverts, it gets below the black line. You see gray bars after every time it comes back above the gray bar, or the black bar, black line. Now, what you don't know, and if you heard me complaining, I apologize. It looked like we froze here on the computer. But what you can see here, the gray bar is the recession. It occurs after we cross back above the black line. And what you might notice is it's a variable amount of time. So just because we haven't had one yet doesn't mean we're not going to get one. And both the 10-3 month, 10-2 crossed above. Now, when you get a recession, and sometimes even before, you'll start to see credit tightness go up. And you could see here that it really has not gone up. In fact, it came down some. So that says not yet. And the diffusion index is up to -4. Typically, it's at -20 when you get it, and we have been to -20 in quite a few months. So yeah, I think we'll have a recession sometime in the future, just not tomorrow or Monday. Know your news and earnings. This is a big week because we got PCE and a first revision of the GDP, which was a surprise to the downside when it came out. Lots of Fed heads. On the right-hand side, you can see that for the week of May 26th, and you got a few Chinese stocks going on Monday, but for the most part, few earnings on Monday, and some big names left: Costco, Foot Locker, Best Buy on Thursday, some of them, Nvidia on Wednesday. I think a lot of tech and semiconductor investors will be eagerly awaiting that. Now, I think we're getting to a point where Nvidia's earnings, I won't say they're contracting, but their growth is probably going to be slowing. And it'll be interesting to see if they're judged by their absolute growth or whether or not they beat and surprise to the upside on growth and revenue or increase going forward. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. On to the charts, and again, my Google group. So I thought we'd start with TradeStation here just because it has automatic drawn trend lines, which I think are more accurate and there's less human bias. What you can see here on the bottom here is we had a trend line going to the V bottom around April 7th or so, and you could see in red here is the 200. And the market, and let's just get the, let's see if I can get that. I'm not sure I can get that here. I think I have to go to something else. Hold on. I know it's on the data window. Perfect. You could see here on this bar that we closed at 579.11. The 200 is 575.76. And that trend line, we broke through it. So the good news on the spider is we closed above the 200. The bad news is we broke the trend line. That is concerning, but not fatal. If we look at the Qs, I thought there was a short-term as well as a longer-term trend line. We broke the short-term, not the long-term. We're still above the 200s. Certainly nothing here on either of these charts says the rally is over. It might be, but we could still recover from here. The diamonds, a little bit less clear, has not broke the trend line, but it did break the 200. And the Russell never got to the 200, failed at the trend line, and has pulled back, now sitting just above the 50. So I got two that look pretty good on the left. I got the Qs and I got the spiders. The diamonds, I'd say, are intermediate, still above the trend line, and the Russell's just looks like it's faltering. Volatility, Um, you could see it was up a little bit on the week. It was up 2.38 on Friday, looking at the UVXY, and the dollar continues to break down. If we just, for grins, throw up weekly charts here, you could see the impact of the weekly on the Russell is pretty profound. And I'm not going to go spend the time to go find the VIX UVXY, but it's way down there. And when you see numbers here in the thousands, it's because of all the reverse splits. And you can see the dollar has broken down as well. All right, that's back. All right, let's go into Market MRI Pro. And I'm running something. We'll see if it gets done before I'm finished. It probably won't. So Market MRI Pro was built by Praveen, and it was built, I think, to reproduce what I do in my top-down analysis on a daily basis and to make my life easy, and it has. This is my home screen, and we call it the daily briefing. Upper left, it gives you the major ETFs that I follow during the day. Over here is the new highs and new lows and new high minus new lows for the NYSE and the NASDAQ, and I like the 12-week time frame. Up here are three major indexes, and looking at the sectors, industry groups, and percent advances in those indexes. And then here we have the S&P 500 sectors and then some themes. So let's start with one-day close and see what happened. Volatility was the big winner. That's never good. Interestingly, for the first time in a while, Bitcoin was down a bit. And you could see here that the major indexes were from minus 0.31 to minus 0.93 on the Qs, from the Russell to the Q, so all less than 1% down. And then the dollar was down 0.5%. I know it was well, this is a 4-day week coming up, so that was a 5-day week. Volatility was up 13%, and Bitcoin was up 4.5%, was the big winners. Over here, you could see the number of new high minus lows at 12 months has gotten very small, but positive on the NYSE, and NASDAQ is negative. If we look what was working, one-day change, we could see on Friday the leadership was utilities, staples, energy, real estate, healthcare. Very defensive type industry groups led, or sectors led. Laggard was the big guys, tech, discretionary, communications, but not horribly. And if you look at a 5-day change to see what we have seen over 5 days, everything has been down, and tech has been down 3.44%. If we look at themes on a 1-day move, uranium has had a run, and look at this, 35% up in the last 50 days. Followed by copper, metals and mining, gold miners, clean tech, silver, renewable energy, Southeast Asia, video games, solar. Do you think this is partly because of the weak dollar? If you look over here, S&P 1500, one of my favorite indexes, because it includes the large cap 500, the small cap 600, and the mid cap 400. If you put every one of those stocks in a sector and an industry group, you could see 27% of sectors were up, which was higher than the prior day. 33% of industry groups up was a little bit lower. Only 32% of stocks in the S&P 1500 were up on Friday. That's not a very bullish number. The NASDAQ 27 and 35, same picture, more sectors, less industry groups. 36% of stocks were up. And the New York Stock Exchange, a little bit better, 45% of sectors, 45% of industry groups, and 44% of stocks. So at best, it was a mixed day, kind of a mixed week looking pattern. The buckets are something that Ian, who we'll be talking about Monday, introduced us to, and it gives a sense of where each stock in an index is sitting within its Bollinger Bands. When you're overbought, you're going to have a lot of stocks up here and a lot above the bands. And when you're oversold, you'll start to see a lot underneath the bands. The gray bar is yesterday, the white bar was the current day. So this would have been Thursday, this would have been Friday. So we are clearly shifting to the left where stocks are coming out of the higher areas, but they're congregating in the center. There's not that much below the bands. I would call this a neutral picture, but we've moved to the left, which shows weakening. Market breadth. The NYSE demonstrates what you hope to see across the markets, at least on Friday, in that it opened higher, traded lower and closed here, well off the bottom with clearly a hammer type candle. That could be a reversal, and that could lead to us going higher on Friday. Not so much here. The Nasdaq just gapped down and really closed near the bottom of the day. Very different. If you look at volume, strong volume on the NYSE, less volume on the Nasdaq. White are stocks above the 20. Green is stocks above the 20. White are stocks above the 50. Red are stocks above the 200. We had gotten to extreme amounts back here. They've come down, and you can see breadth is weakening on both. Now, if we go down the middle, I won't impact either of these, but the left is the NYSE, new high, new lows, positive. Nasdaq was negative. Advanced decline was negative on both, and up-down volume was still positive on the NYSE. No big signals on the bottom. If we go and we look at, we already looked at the index ETFs, but let's just look again for a second. I just want to show you the high-low jumps we've all come off of extended with this pullback. So I'm not sure we're broken, and I'm going to give it a little bit of room. But I don't like what I'm seeing in the diamonds nor in the Russell. If I look at commodities, you're going to see some things related to that weak dollar. Gold is rebounding and attacking against all-time highs, and you can see gold was up 2%. Silver also attacking, got above the 50. Will it reach all-time highs? We'll see up 1.4. Oil struggling between issues about global demand, pumping more from the Mideast and OPEC plus, but oil on Friday was plus 1.27, and natural gas rebounded, got above the 200, was up 1%. Probably that was a positive thing, although you always have to wonder why it's positive. The 10-year and the 30-year both came down 0.9% and 0.7 respectively. So that's the markets that we're seeing. And again, let me reiterate my personal position, not investment advice. I am still long. Sometimes I'll have calls that I will keep deep in the money because to extend them and roll them doesn't cost much. Problem is, it's like owning the stock. When the stock falls hard, you lose some profits. So I have raised my strike prices, which is kind of like raising my stop. And I've also sold my existing positions and bought higher strike price at a later date, so up and out on time. And I did put some profits away. If you are option heavy historically, you know at market changes, big changes, you get hurt or helped depending on which way you're leaning. We looked at the daily briefing. If we look at the ratio charts, to get a sense of what's working, what's not working. Let me quickly look at them. Industrials remains extremely strong. You could see this week was a positive for their defensive staples, utilities, real estate, short-term, and even healthcare. Technology softened a bit, as did discretionary, and you could see the strength in Bitcoin up to Friday when it had a down session for a rarity. Now, the true strength, I think, of this program is how I can manipulate markets and such. So let's take a look at, start with this impulse view. You see there's 3,463 stocks. That will vary every day based upon market changes. It includes a basket of the NASDAQ, the NYSE, and the Amex, and it's pre-filtered for $1 and 100,000 shares. So if you drop below $1 or below 100,000 or vice versa, the total count will change. Each of these stocks, in fact, just open this up, you can see everything is assigned a sector and an industry group. So when I go to top down, these are not the S&P 500 sectors. They are my impulse list, the JAS list, those 3,500 or so stocks. If we make it by percent change, you could see a relatively, what's the word I want to use, defensive looking posture. Here we have all the various industry groups, and it's not what I wanted to do. Let me flip this one. There you go. And I've ranked them here by 1 day percentage change. And you can see the big standout by far is uranium. So what I'm going to do today, is I'm just going to go through and let's take the top 10 or 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's go to 12. So a couple things pop out at me. The things that we're moving are a lot of commodities, uranium, precious metals, oil, gas, midstream, copper, gold. Um, is solar a commodity? Not really, but um, it's oil matters. Utilities, tobacco, very defensive, more utilities. Not a very growth related list. So it gives us 227 stocks. You could see that these groups were so strong of the 227, probably no more than 25 stocks were actually down. So a very, very powerful session for these. Now, I'm going to look at a different way of ranking them. I'm going to use a short-term momentum. And let's just go down the list. LEU. And the first one takes a little longer to load because we're waking up the server. You could see LEU had a big breakout. Now, it's not extended. Both the daily on top and the weekly bongo are blue. Had a big gap up here on massive volume. The green line is the EMS signal, which has been in a buy since down here. The blue is the shorter term CPR, which is in a buy. And then we have gaps, volume, breakout, momentum, not in a squeeze with a PSAR flip. And look at the relative strength in the OBV. You wonder about triple tops here, and that would have me a little bit nervous, but this thing looks really powerful. OKLO as a utility, breaking out here. It's an IPO, so I don't have extension on it. This is one of my favorites. It was my favorite the last couple of weeks. It really broke out hard on Friday. Again, look at the volume, the dots, relative strength in OBV. The difficulty with CCJ is that it's getting extended, but it is certainly a leader. The next one down is small utilities, NuScale, Power Corp, small nuclear reactors. And again, the entire complex is getting close to extended, but a huge gappy move. CEG, another power maker. One of my favorites of the year, GEV, GE Vernova, electrical production, but also some services to support nuclear development. On fire, UEC is another uranium stock. Now, the good news about this one is it's a lot less extended, but it's not the leader. The leader is Cameco, CCJ. VST, Vista Energy, has broken out, starting to run, another utility. And then Philip Morris, all-time highs, maybe. Let's see. Let's look at monthly. Well, at least going back to 17, it's highs. That's pretty impressive, isn't it? Now, personally, I'm not buying Philip Morris. I'm a cancer doctor. I have a hard time buying a cigarette company. But you can't argue with this being a defensive haven, and that's causing prices to go high. VVPR, Vivo Power, don't know anything about it. It's a cheap utility stock. Like so many else, it's breaking out. Here, UUUU is another, I think this is Clean Fuels, Energy Fuels. This is another uranium play, and similar to CCJ, took out the 200 on a lot of volume. 4 dots coming out of a squeeze, PSAR flip. Relative strength in OBV looked good. It looked probably be easier for me to buy this today than CCJ, but CCJ fundamentally is a stronger company. Talon Energy. And then you have the gold miners. Now gold is pulled back. This looks just like the GLD ETF, but you'll see a host of these that are breaking out of a flag formation. Here's another Franco-Nevada, Royal Gold. Next Gen Energy, NXE, and I'd like it better if it took out the 200, but it's got the benefit of being less extended, and the right edge is powerful, massive volume. And you haven't flipped the EMS, you're flipping the EMS on that day. CPR fired as well to grab volume, breakout momentum. Southern Copper, not yet. And then you have the silver stocks, and like gold, came down a bit. And what you see here is Wheaton broke out from their recent move. Frontier Marine Shipping of oil, I believe, got to get above that 200. Freeport McMoran Copper doesn't look that great. Brook Energy, don't know it from Adam, $2 stock, that's why. So what we've done, and then here's a midstream, and these are all looking about the same. And if you don't own one, they're not a bad thing to own. They often come with dividends, and they go up with the price of oil. They can still hold up even if oil comes down because a lot of it's not tied to the price of oil, and you have gas and other things going through them as well. One in the family that I liked is this one here, TRP. And why did I like TRP? It doesn't look that much different, although you probably could draw a cup and a handle and starting to break out if I want to be very accommodating. But the other reason to like it is it pays a 6.5% dividend. So to me, that's top down. I made my comment on the market. I felt the market's likely to go higher, but it could stub its toes. We identified a bunch of defensive type industry groups that are leading, and we found some of the better looking stocks. And we certainly, between CCJ and a couple of the gold stocks, WPM and TRP, we see some things that could be bought right here. Now, I always look at the top performing industry groups, and typically what I'll do is I say utilities were number one, these are the industry groups, and I might pick a couple of those as well. I think that top down is a great way to approach the market, and it's a way to right size it where you don't have to worry about 8,000 stocks. You take the top 3 sectors, top 10 industry groups from those combined 3 sectors. You probably got 400 or 500 stocks. You put price and volume filters on it, and you might be left with 100. Now that's top down. We also built this to work from a bottoms up. So one thing I like to do, and for those that watch wealth charts know, I like to look for replacements in a downtrend. Let's put a price of $5 and volume of 500,000. Let's take that 3,400 down to, wow, 515 because there's not that many replacements in a downtrend. Well, that would be retracements in a downtrend. And these would be stocks that are looking to break down. So let's rank them by the number of negative or down. Let's just look at some of these. These are any of these reasonable to short? Workday's gone too far. Raw Stores too far. MNSO, gap down. So this is what I like. I like a stock that has failed at resistance, tried to retest and failed and broke down. Now the time to have shorted though was up here, and it's a cheap stock. Decker's probably too far gone. Burlington Coat Factory, I'd be looking to see if this can rally into the 200 and fail. BCAY too far down. Booz Allen. So you could see a lot of these stocks have gapped against us. What surprised me when I saw it on the list was MicroStrategy. I'm not sure I'd be shorting this thing. It's so volatile. And you expect it to bounce soon, especially with the strength of Bitcoin, but this one surprised me. The other one I like to do is pullbacks and uptrends, and Since I still think the market might be going higher, let's hit pullbacks and uptrends. $5, 500,000. Okay, let's rank it by up. UEC, which is a uranium play, breaking out to the 200. It's a cheap stock. Does it even make money? We'll look here. It's kind of break even with small revenue dollars. Miras is really like this guy a lot. It went up as the abstracts of our upcoming ASCO cancer meetings were released. The abstracts give you a clue as to what we're going to hear there. It can be a very volatile time in biotech. Let's see what the market cap is of Miras. The market cap is $2.9 billion. It looks like they have a high likelihood of getting an approval of a drug combination. Might be interesting to watch. It is getting extended. You'd be ignoring the extension for a story. Frontier we looked at before. It's got to get above the 200. Here's one of my favorite charts. BWXT. It's an electronics supplier or manufacturer. It makes money. It almost always has an earnings surprise and a revenue surprise. It has a small dividend, so about 0.87%, although that might be wrong. And what else do we have on it? Forward PE 38%. I like the fact that it's breaking out. Earnings came out the 5th, so you got a couple months. I do like this move, and notice here volume, EMS, CPR, gap volume breakup momentum from a squeeze, a PSAR flip, and great relative strength at OBV. I think of all the stocks I've showed you so far today, I find BWXT to be one of the best looking patterns. XGN, cheap stock in healthcare, don't know it. VVPR, it's a cheap stock, ran up, pulled back, and running. I wonder if this isn't a nuclear stock. Let's see what it says here. Here's the news. Some takeover stock. So I probably wouldn't be that excited there. Another stock I like a lot, and we've talked about this a few times, it's called Verastem. And Verastem is a small biotech that had a recent approval of a drug. They did their secondary, and we're going into the major cancer meetings. If you have an FDA approval and a market cap of less than $1 billion, you have got to be a takeover candidate. So the fact that it's still cheap would bother me a little bit about the takeover piece. You have updated results at ASCO. I think this is an interesting one. Again, I believe their drug was recently approved. They have great data, and VSTM, their secondaries out of the way. I like that one as much as a story. UUUU is another uranium play that we mentioned earlier. A very lower cost, less expensive stock than CCJ, breaking above the 200. And I just like to see, it's got almost no earnings and revenues in millions. I'd still buy CCJ, not to say that the whole sector wouldn't go. IBN, an international bank, breaking out here, has had a long run. And you could go through the list. Now, because we're searching by number of green dots, we're only going to see things come to the top that have green dots. I'm still confused on the news that caused this to happen about whether or not Trump got an investment from Japan Steel, Nippon Steel, and the companies will have ownership in each other and stay independent, or did he authorize a takeover? The response looks like a takeover, but I don't think that's what backs Nippon deal. It may be some changes around. See, he calls it a partnership, and the ownership stays here. I think they might be camouflaging takeout. Looking at the list here, here's another healthcare, I think a biotech stock. I don't know what they do. Kaniska Pharma, I bet they don't have much in the way of revenue. Actually surprised they do have some revenue, so they have something on the market. They just turned positive on earnings. Next earnings are July 22nd. And I think this looks interesting. Here you could have, oh, I'm not the best guy at trend lines, hence why I like the automatic trend line. But I don't, I've got, it's from Sagar's Q tool set. I just don't have it built in here because the code is secret. Excuse me. All right, so that's another approach. Another thing I like to do is let's clear everything. Let's look at some specific signals. My 2-day momentum up is one of my favorite buy-sell signals. And you should see down here 2 blue dots in a row, and here NNE. And keeping with the theme, what a beautiful looking pattern, although it's probably getting extended, although it's an IPO, so I don't have enough data on it to say that. Nano nuclear energy. There is clearly a move to have these small nuclear reactors for a lot of the data centers and probably the Bitcoin companies. Big gap up, powerful move. The whole uranium complex was on fire. Why? Because Trump decided he liked him and he said something favorable. Is it too late to buy? Probably not. It's still early in its stage, but I think there's going to be some risk tied to it. Another thing I like, since I like pullbacks and uptrends, if that CPR is a reversal signal, what if I pick stocks that have a CPR change in 2 time frames and 5 and 500,000 shares? Let's take a look. There's 136. UEC is a uranium play we've looked at, and XGen Energy we looked at, Miras, Frontier. Let's just look at that BWXT again. It is not extended. It has a clear break of the 200, and you could probably argue that after that run up, whoops, it's embarrassing my own program, and I'm not good at drawing lines, but that's just me. Probably you could argue that it had a bit of after this huge run up with the bottom of the market, a bit of a flag, and it's broken out cleanly. Again, I like BWXT a lot. And notice you'll have the CPR dot here. And if I go to a weekly, you better see the last one being blue as well. So this is when the weekly turned around. And on the daily, this is when the daily turned around. So here's Verastem again, which I like as well. KTOS, a defensive stock, defense industry. You could again argue a cup and a handle and a breakout. I think if this one clears here, that one might be very interesting. A couple other things that I liked. I'm running out of steam, but this is what I do, and I think my product here, and I thank Praveen a lot every day when I use it, really makes it easy. VSTM we looked at. Let's just look at it again. Oh, I forgot. If you have the newest update, the first time you hit a letter, it opens this up. So sometimes you won't see your first letter there because it was used to open it. I think Verastem, nice uptrend. I think it's ready to run. I think the oncology meetings will be interesting for it. CCJ is one of the companies in the nuclear space that I thought was interesting, breaking out but extended. UUUU, and one more U for good luck. Energy Fuels, breaking out a uranium. Again, I've showed this one a couple of times. Let me just show it one more time because I really think that is, I work up something for Tuesday, assuming the market doesn't blow up one way or the other. BWXT will be the one that I put together an option trade on. Maybe we'll do that on Monday. Last weekend, we talked about quantum computers. QUBT was one that we looked at. There's a whole bunch of them. and you could see how it's starting to move. QNTM, Quantum, I thought was one. Maybe not. There it is, Quantum. No, that's a biotech. I like how it's moving though. um, and then we talked about TRP, which was a MLP with a nice dividend. Now I'd hoped that my TradeStation was finished so I could show you some things from that, but we're still running and we still got some time to go. So on that note, I'm going to, again, thank you for being here as always. Please like and subscribe. Love to have you join my Google group. All you got to do is go to Google Groups, sign in with your Google ID and look for Top Down Trader. And then think about coming to the Memorial Day talk where, yes, I will use Market MRI Pro some, but I'm also going to use a lot of HDSI and show you some of the things that I still do in HDSI and things that were taught to me by Ian Woodward. And for those of us who were lucky enough to know him and learn from him, he was such a gem. Have a great rest of the holiday. Be safe. Come see me Monday. Take care, everybody.